Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Brian Joyce. He's a managing director on Nasdaq's market intelligence desk. We're going to take a fresh look at crude for you as we assess some key levels. Brian, as always, thank you so much for joining me. Before we get into the charts, 4 IPOs today alone on the Nasdaq stock market. Tell us what that day was like for you guys.
Yes, it was very busy this morning. The companies were here as well, so there's a lot going on, a lot of celebration. The IPO, they for the most part, opened up very well today, so there's a lot of demand there. Actually, if there was a problem, it was trying to get enough sellers to come back in on that opening auction.
All right, and we're all green on the 3 major averages, but we want to focus on oil today. Let's pull up a chart of oil on the weekly, looking at some key levels, and we've been discussing this over the past 2 to 3 sessions that we've been working on them.
Yeah, so we started covering this early in June. We wrote a midday update on June 7th, which was the first week of June. Oil, as we know, had a phenomenal rise in the first part of 2019. It was up 57%. When it peaked around late April, early May, it then had a 24% decline into the first week of June. We highlighted then that that could be a bottoming pattern based, or a bottoming week in the oil, in the price of oil, because of the price pattern, which formed the hammerstick candle. But not just because of the pattern. You certainly want to have more support or more reasons to be calling it a potential bottom in a security, particularly oil. And what we also have is there's a cluster of technical support represented by the 200-week moving average, as well as the 61.8 retracement of the entire uptrend from December through the April high. In addition to that, we had a double bottom on the momentum indicator, the RSI, which is what we saw in December. So all of those things combined made us think it was an attractive risk reward to go in and potentially expect the bottom.
All right, let's pull up our next chart, just a generic chart of what a double bottom is. We have been doing some work on this as well.
Yeah, so a double bottom simply is when you have a steep downtrend, which finally makes a significant low. Usually the candlesticks will represent a bottoming pattern, or the momentum indicators will be deep oversold. You have a pretty healthy relief rally, which then rolls over and heads back down towards that prior low, and that low successfully holds. And then the trigger of the pattern takes place when the instrument, in this case oil that we're talking about, makes a move back above the midpoint of the pattern, which is also referred to as a W pattern because it's shaped like the letter W.
All right, now let's pull up the daily chart on oil, and we could see that pattern right where it's indicated.
Correct. So we then what I forgot to mention on the weekly chart was that you do want to see confirmation in the next week's price action, which we didn't see this time in oil. However, the pattern that it formed was a bearish engulfing, which, as its name infers, it's bearish. However, when we looked at the daily period chart, we could see that there was still the possibility of a double bottom pattern, which did in fact play out, so that those lows from the prior week of June 7th did hold. We came very close to testing those lows within 1%, and then oil resumed higher, largely because of what was going on the geopolitical front with Iran. This week, it was even benefited more so by the weekly inventory data. We had the breakout above the midpoint, 54.84. The distance of that bottoming pattern is $4.24, which then projects a measured move up towards 59.10, which we finally reached yesterday. And now that we're stalling here along the 200-day moving average, which is not a surprise. We had an 18% move off the lows of this month. The 200-day oil has proven to be sensitive to in the past. Just recently in May, it acted as support for a couple of weeks. So now that we're coming back on the upside, we should expect it to act as resistance. Hopefully, it can hold these levels around here within a 2-3% range, would likely form a bull flag, and then what you want to see is upside breakout and ideally the resumption to the upside.
So you want to see that consolidation following the move?
Absolutely. We had an RSI, if you look down here, of 21. That's an extreme almost oversold level. So while now the RSI is approximately 59.60, which is not technically yet overbought, when it's coming from a low of 21, that's a pretty phenomenal move. So you do want to, some healthy consolidation is certainly not a bad thing.
All right. Our resident technician, thank you as always for joining me.
Thank you.
And thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.